Good morning. I'm Kelly Melanson, and I'm a Chartered Professional Accountant, and I have today with me Courtney from New Initiatives Inc., Consulting Inc. They're an HR firm, and Correct Miller is the president, and Courtney is the consultant that works with Correct. So today we have a few things about the income tax splitting, a few things that have been more defined that I want to go over with you, some personal tax issues, things to get ready for, deadlines. And then I also have some things I want Courtney to talk about, which is the new Bill 148. So I'm going to start by saying first, everyone should know that March 1st is an RSP deadline. So please, if you need any income, not income tax splitting, but tax planning, please come see me way before that last week because it gets really, really busy and crazy. Also, too, I want to talk about there was a disability tax credit for diabetes type 1, and apparently a few of them have been challenged and disallowed. The government is now going to have a look at that again, and I believe they could get their disability tax credit back. So those who have diabetes type 1, remember you are eligible for a disability tax credit, which is a nice tax credit, so go after it. And the last thing I want to talk about is that income sprinkling. Back in July 18th, the government brought in some new rules regarding the income sprinkling with dividends and income payroll for paying spouses and children and in your corporation. So just a few exclusions that I want to go over. So if you are under any of these, then you will be excluded from the new rules. So the first one is if you're if you're an adult over 18 or over, and you have made a substantial labor contribution to the corporation, generally they're looking at 20 hours a week. If you are working 20 hours a week, then they consider that to be fine, that you're okay to be making income from that corporation. Or during any previous 5 years, then you're good to go. So you will not be affected by those new rules. Another exclusion will be adults age 25 or over who own 10% or more of a corporation that earns less than 90% of the income from the provision of services and is not a professional corporation. So professional corporations are accountants, lawyers, doctors, dentists, chiropractors, and vets. So far, they are, unfortunately, you cannot income split with those individual corporations. The other exclusion is individuals who receive capital gains from a qualified small business corporation shares and qualified farmer fishing property, if they would not be subject to the highest marginal rate on the gains under existing rules. And then the last thing that was talked a lot about was this passive income, the 50,000 benchmark that you're allowed to make, or the maximum amount you're allowed to make before having to claim the top rate. So right now there's really still nothing defining, whether it's new investments, old investments. So I believe budget 2018 is going to define that in greater detail. So that's it so far. And if you have any questions or concerns regarding either personal tax or these rules, by all means, give us a call. So Courtney, lots of things have come up.
A lot. And I think a lot of our clients are feeling a little bit overwhelmed with all the changes that are happening because they happen so quickly. Mm-hmm. I know that Bill 148 was in the talks for a little bit there. And then in November, it was solidified that it was passing.
Yes.
And then the changes happened right on January 1st of 2018. So a lot of businesses have been contacting us just feeling very overwhelmed by all the changes. So I'm going to briefly go over what's been happening.
Okay.
If your business does need help going forward, please contact us. New Initiatives HR Consulting. We can do handbooks for you to help you with policies to make sure that you're compliant, contracts, make sure that your employee files are up to date, and so on. Okay. In terms of the first things that we like our clients to know is that with this new bill, there's tougher penalties. Mm-hmm. So the Ministry of Labor is now able to publicize the name of companies that aren't following Bill 148, and they're allowed to say the reason that they've been in breach of it. On top of actually imposing tougher penalties as well. So a lot of businesses aren't aware of this change, and I would hate for them to become aware of it by it happening to them. Mm-hmm. Another one would be the fact that with these new changes, a lot of businesses have to be posting an ESA poster. you've already had to post this poster in your office before. It says ESA, and it just gives a rundown of minimum wage, vacation for your employees, and so on. Now there's a new poster, and that new poster needs to be posted in your workplace and needs to be distributed individually to your employees. Okay. I don't know if you can put a link to that with the vlog. There's a new link. You just go print it. You can send it to them by email just to be compliant.
Oh, that'd be great.
Yeah. So on top of that, so it's not just the minimum wage, it's also stat holidays,
Yes,
which is
that's the killer.
Yes.
I think that's really hurting a lot of small businesses that have a lot of part-timers, because a lot of the minimum wagers are part-timers.
Yes.
In that type of business.
That's what's affecting the most, and that's the complaints we've heard the most.
Yeah.
Is, say, a library in Durham has said, I have part-timers working, summer students, they get Canada Day off, and I have to make sure that they're getting paid an average day of work. And yes, unfortunately. So basically how it works now is you use the previous 2 weeks of before the stat holiday, and you divide that by the days that the employee worked. So
the previous 2 weeks.
Yeah, the previous 2 weeks.
So in the past, you used to take the previous 4 weeks and divide by 20. So a part-timer on average would get maybe an hour for that day of stat.
Yes.
Where now the average is probably going to be the full day.
Yes. So if their average is...
That's a big difference.
Yeah. So if their average is a 4-hour day, they're getting 4 hours. If their average is a 6-hour day, they're getting 6 hours.
Right.
So that's a big one as well. I would say that another big one would be the personal emergency leave.
Yes.
Yes. Mm-hmm. Before Bill 148, personal emergency leave was something that corporations with over 50 employees would have to give. So what it required was 10 personal emergency leave days that every employee had to be entitled to.
Unpaid?
The 2 were paid, 8 were unpaid.
Okay.
Now it's a requirement for everybody. So every business, if you have 1 employee, that's a requirement of yours.
Even part-timers?
Yes.
Yeah.
Yes.
Boy, yeah.
And again, that's a complaint we're getting is, so your business is, say, hiring a summer student. Mm-hmm. They come in, say, June, July, whatever it is, till August. And we've been asked, are they entitled to those 10 personal emergency leave days, 2 of which are paid? And
even though they haven't been there 3 months?
Even if they haven't been there 3 months.
Wow.
I believe it kicks in, don't quote me on this, but after the first week of them being employed. Yes.
Okay. So what if there's a stat holiday and they decide they want to extend that nice little long weekend since they are only working in the summer and they're students and may want to have a lovely weekend away?
Yes.
And they call in the next 2 days and say they're sick. Do they get paid for that stat holiday?
If they call in sick and they can... See, this is the iffy part, is that right now you're not allowed to ask... Under those personal emergency leave days, you're no longer allowed to ask for a doctor's note. So that's the iffy part with the first and last normally that employers go by. You have to work your shift before the stat holiday and the shift after. If you didn't work the shift after, you'd have to give them a doctor's note.
Right.
Now, legally, you're not really allowed to ask for that doctor's note. So I don't personally know. I think that'd be more of a question for an employment lawyer to know what's the, how you could go about that.
Yeah.
But yeah, that's another big change that employers are finding a little bit overwhelming as well.
And did they all know, like the businesses that have a lot of minimum wage, were they informed in an appropriate amount of time, would you say, so that they could plan and budget and sort of rejig their numbers to make sure that it doesn't sink them?
I personally don't think so. A lot of people like to reference like Vancouver, Seattle, those places where the minimum wage was increased to $15. And I think that in terms of Seattle, I read they did a 3-year kind of build up to the minimum wage being $15. Wow. And obviously it was accelerated more so than the average gross of minimum wage. But in terms of us, I think it was November. Then all of a sudden on January 1st, it went to $14 an hour. And then January 1st of 2019, it'll be $15 an hour. Yeah.
Well, folks, that's our win government, so we all know what we want to do next voting time, don't we?
I think a lot of local businesses are feeling that way.
Well, between, the Liberals doing this to corporate and, Win doing this now with the employee wage hike, it's kind of frightening what some small businesses must be going through right now.
Yeah, there's going to be a lot of readjusting. When we employ
such a large amount of employment, it's kind of shocking how much they're damaging, small business and their bottom lines, so... It'll be interesting.
Yeah, it was a quick change. And the last thing that I wanted, the biggest one, I know there's not a lot of new leaves with Bill 148, but I won't touch on those they're very vast. I mean, you have the new extended maternity leave.
Oh, yeah.
You have
Right.
the new, there's just too much to cover in a quick
Right.
segment.
Yeah, you're best to just book an appointment with you guys. And
Yeah, so we can go over
that.
that.
Yeah.
But the last thing I want to touch on as well is the vacation.
Okay.
So vacation
Oh,
for your
yes.
employees is normally you get 2 weeks vacation per year.
Right.
Now, once your employee hits that 5-year mark, they're now entitled to 3 weeks of vacation. So a lot of you small businesses, if you have an employee that's been there, employees that have been there more than 5 years, they are now, as of January 1st, entitled to an extra week of vacation.
Wow. So that's a 2% hike.
Yes. So, or 6% on their, on their pay.
From 4 to 6.
Yes.
Right? Yeah. Wow.
Yeah.
Boy, oh boy, there we have it. So if you need some number crunching, or if you need some tax planning or some HR consulting, give us a call, and you can reach New Initiatives. I believe it's newinitiativesinc.com.
HR consulting. So it's newinitiativeshr.com.
Okay,
Yeah.
There you go. There you have it.
Yes.
Thank you for joining us again. Have a great day.